In this video, you're going to learn how to set up a Bollinger Bands strategy, the strategy historical performance, and whether it's still profitable to trade the Bollinger Bands in today's market. Bollinger Bands are a highly popular technique. Many traders believe the closer the prices move to the upper band, the more overbought the market, and the closer the prices move to the lower band, the more oversold the market. The setting for a Bollinger Bands strategy is pretty straightforward. The period for calculating the Bollinger Bands is 20. The upper and lower bands are set to 2 standard deviations from the moving average. Our entry rule for long is when the price dropped below the lower band and started to mean revert by crossing over the lower band. We don't want to buy when the price is still falling, we only buy when the price starts showing signs to rise again. For short, we'll get ready when the price exceeds the upper band and start showing signs of exhaustion and begin to mean revert by seeing the price crosses under the upper band. Again, we don't want to sell when the price is soaring up. We'll only sell when the momentum starts showing weaknesses. We're going to test 2 different exit rules in this testing. One way of exiting is when the price means to revert to the baseline, also known as the moving average. Another way of exiting is when there is an opposite signal occurs. The reason we're going to try different exit rules is that you'll see later that it'll have a huge impact on our trading performance. Before recording this video, I've already tested this generic version of Bollinger Band strategy and knows that it is most profitable when trading on the 2-hour time frame, therefore we'll be trading on the 2-hour chart. However, if you're interested in trading other time frames and wondering what's the performance like, leave a comment below and I'll give you my results. We first start off by using the opposite signal exit rule, reviewing the performance of the strategy on the 18 major currency pairs. Changing our time frame to H2 and we're ready to go. We quickly skim through the profit factor for each pair. I can see there is nothing interesting as they are not profitable. Let's move on to stocks. We can see that despite our small sample of assets tested, the Bollinger Band strategy with opposite signal exit rule already exhibits profitability when trading the Dow Jones Index, SPX, Nasdaq, and Microsoft on the 2-hour time frame. Let's look at what will happen if we exit when the price hits the midline of the Bollinger Band, as this is one of the more common approaches. Again, we checked out the majors. Nothing interesting is found. Going back to our sample of stocks. Although there are still profitable assets traded by this strategy, the overall performance got worse. The reason is that closing trades at the midline happens more frequently than exiting when an opposite signal arises. As we close trades more frequently, the cost of trading increases while the return didn't increase proportionally. Therefore, when trading the Bollinger Band on the assets that we've tested, you should definitely use the opposite signal exit rule for better performance. Savvy traders can go on, test it yourself and explore further into the potential of Bollinger Bands and other assets. If you want to learn more about what trading strategies are working, please give me a like and subscribe to my channel. Thanks for watching and see you soon.